as we normally do. What I'm going to be covering tonight is obviously strategy optimization, and this will be part one of a multi-series presentation. So as I've been delving more and more into strategy optimization, walk forward analysis, and the tools that are available now in TradeStation, because obviously TradeStation is a platform that is continually evolving. So what I've found is that there's a lot of really good new tools that we can access now as part of our TradeStation platform that weren't previously there before or have been improved. So my job will be over the next 2 weeks is to show you what you can potentially do with the walk forward optimization and the new awesome tools that they have available for us. So this is going to be really a lot of fun. We're going to learn a lot of stuff, obviously, and it's going to improve the robustness of our systems as well. That's really the end game. So whatever advantage we can get and whatever way in which we can automate our process or say cut down on time for testing is really what we're kind of after, isn't it? Because ultimately our goal is to have the best possible strategies with the least amount of work required to develop those strategies. So we want to use every tool at our fingertips. So that brings us to the start of tonight's presentation, which is strategy optimization part one. So I'm going to focus purely on the first part of this tonight, and that's really building a framework for us to go into a lot more detail, because there is a lot of information and there's a lot of there's a fairly large technical aspect to walk forward analysis, and particularly using a new platform. So it's going to be a case I'll break it down for us, because we want to get the most out of it. I mean, there's no point rushing through or just skipping bits. We want to find out exactly what's available to us and know exactly what those tools do, so we can kind of get the most out of our systems and make sure that we're creating really good high performance strategies. So as I said, strategy optimization part one is the presentation title. The agenda for tonight is we're going to have a look at optimization overview. We're going to do a demonstration in TradeStation. We're going to look at our inputs and filters. We're going to primarily focus tonight on the trend. The reason why I've selected that system is because it's the easiest and it's very robust, and we're just going to start we're going to start with that as a stress test. We're going to give that a bit of a stress test during the strategy optimization part two. So we'll be able to see how it stacks up going forward. The fourth point there, optimization methodology. So how are we going to optimize? What process are we going to use? 5 is obviously interpreting the reports. 6 will be doing our walk forward testing. So that's a new feature that we haven't kind of jumped into before, but we're going to. And 7 is producing a robust strategy. So that's the agenda going through this presentation. We may not get through all of that tonight, but we'll do our best to get through a good percentage of it. And as I mentioned before, the goal is to build a strategy to come out of this training with the skills and ability to further improve and enhance the strategy that you already have, and obviously to improve the way we develop our strategies going forward. So what is optimization? So many of you probably have had experience with automated trading. Some may not have. Some of you have, definitely, and you've probably had different experiences with different aspects of that. But really, optimization is the process of finding an optimal input parameters for trading over a historical backtesting data loaded into TradeStation. So it doesn't have to be TradeStation. It can be multi-charts. It could be MT4. It could be any platform. But basically, that snapshot there, the process of finding the optimal inputs. So that gives you a little bit of a clue of what could go wrong, doesn't it? Because optimization is trying to get the best parameters for our trading to potentially improve our performance going forward, because we're optimizing based on historical data. So as they say, there's no guarantee that our historical results won't be the same as our results moving forward. So we've got to be a little bit careful with our optimization, because it can be a blessing and a curse as well. If you can really take optimization to a very very high level, but you can also over optimize, obviously. In Now that you've been with me for a while, and obviously there's some new traders in here as well, how could you possibly, what would dictate over optimizing? Can you give me an example within the group of potentially over optimizing a strategy? How would that look? Because we've obviously got strategies. We're going to cover one of those tonight, the trend. We have a number of inputs. There's 20 odd plus inputs in our trend trading strategy. How would over optimizing look on our system if we were to do that, if that was the case? What could potentially cause us to over optimize a system? Yeah, we might have too many inputs, too many variables, um, optimizing every single setting, so it doesn't really create it's too finely tuned. Reducing the number of trades, so there's very little trades. So there's little things that we can do that, and it's really trying to squeeze every little bit of profit out of that last 3 months, 6 months, 9 months, 12 months of data that you've tested, and doing that by optimizing every single input in your strategy. That will typically give you a very, very highly calibrated system that is really highly tuned to what happened 6 months ago or the last 6 months of data. So going forward, any change in that sequence of data, any change to the market dynamics will definitely impact on our strategy. So we need something a bit more robust, don't we? And less inputs, that's ideally what we want. Because it doesn't really matter where we get in necessarily, it's how we manage our trade. It's ideally that we're looking for momentum, because momentum drives the market. We need, most of our strategies are trending based strategies. We need that range and movement, and I'll go through a little bit more on that as we get to the charts. So optimization helps us moving forward by obviously making sure that we've got systems that are calibrated to what's happened in the past, because the historical data is all we've got. Basically, that's what we've got as a reference point. So we need to kind of stake our claim somewhere. So we stake our claim on the last 6 months worth of data, or the last 3 months worth of data, and that helps us to formulate a strategy going forward, doesn't it? I mean, there's no guarantee that anything we put together is going to work in the future, because obviously, human emotion drives the market. So as good at technicians as we are, you never really know what's going to happen, and we're not trying to predict the market. We're just using probabilities to get an outcome. So the probabilities are what we're after. So is that all we need to do with our strategy? So do we just need to optimize? Do we just need to look at obviously the inputs and go in and start trading, optimize our strategy and go and start trading? We typically don't, do we? We look at things like the daily chart to get an idea, a feel for volatility, range, things like that. They start to help us shape our idea and concept of what we want to do when we start testing, don't we? We look at days of the week, we look at time of the day, we look at our circuit breaker, we look at seasonality, we look at volume. They're all things that we're building in as part of our optimization process. So yeah, look, we do have our inputs and we have our indicators, and we're definitely optimizing our strategy based on those. But we're also cognizant of the fact that volatility is driving these markets, and you really want to be ahead. That's why when we say, in module 7, which I think is module 8 now, we need to know a little bit more about our market domain. We need to be invested in the market that we're trading. So if we've got a good market profile, we can see, like Jason's mentioned, their seasonality. That's a great way to have an idea of when you potentially might need to modify your strategy. Because optimization is not just about creating a strategy and then it runs and it's never changed. It's about creating a strategy that is going to have a high probability, or a reasonably high probability, of working going forward. But then if the market dynamics change, then we know that about the market because we're watching it, we've invested in the market, we've got a good understanding of the market dynamics. Once we see those changes, we can then go back to our strategy and we can do what? What can we do once we start to see modifications or changes in the market dynamics? We can tweak it. Commonly referred to, we can optimize it. We can re-optimize. We'll re-engineer our strategy. That's easy. Like, that's really the process that we're going through. We set up our initial testing, we let it run in real time, and we'll talk about in-sample and out-of-sample data as we go forward. And then we tweak it, we re-engineer it. So the market conditions, obviously, that last point there, they're not necessarily going to stay the same, obviously. And we want them to be the same or similar to our back testing, but the reality is that's not potentially going to happen. So at some point in time, we're ready, we have the skills, we have the ability to be able to respond accordingly, which is exactly what we want. So the goal of optimization is to test your strategy for robustness. So really, when you optimize your strategy, you're wanting to see, right, well, what happens, how does my strategy work over the tested data, and then what happens when I go live in the market. That's why we look at in-sample, out-of-sample data. That's why we look at running your system and then forward testing your system. So we always want to create a strategy and then we want to forward test it. We want to see that whatever inputs we've created, that information and that performance is reflected going forward. And that's really where optimization and walk forward optimization come into play, because it allows us to do a little bit of this optimization and forward testing for the robustness of our system before we jump in and do any real-time tracking of our strategy. So it just allows us to get an idea quickly as to the potential success of our system and how solid our system is going to be in the market. So one of the keys here with your goal for optimization is that and we mentioned it before, we don't want to be exhaustive in our testing, do we? Because if we're exhaustive in our testing, like we mentioned before, we're going to end up with a system that really doesn't have it's really too highly tuned to the market. And that can cause us a situation where we get a fairly strong drawdown, or we can get a very quick drawdown if the market dynamics change. So we've got to be a little bit careful. It's, as I mentioned before, it's a double-edged sword. You've got to have a balance there with your inputs. So let's have a look at the types of optimization we can do. We can do exhaustive, and this is exhaustive one is the most likely to cause curve fitting. So that's basically where you're testing every single parameter, getting the most juice out of your strategy and coming up with the highest overall net profit that you can achieve. Now, from our experience, is that really, now when you look at equity charts now and you look at that overall net profit, and you've really done everything you can to squeeze every little bit out of this optimization, is the net profit the key driver of performance for us? Is that overall net profit, is that the thing that we're really going to hang our hat on and say, look, it's got a great average trade net profit, it's got a great net profit overall? This definitely is a strategy that I would be running with, trying to get the most out of it. The overall net profit is exactly what I'm after. Is that one of the key things that we're looking at? Definitely not. No, that's probably, I mean, it's important, but it's definitely not a driver, and it can really, it can be very misleading. Traders get drawn into seeing a big net profit and thinking that particularly with automation and a strategy that's going to work in real time, and that can be very misleading. So that is definitely the case potentially for curve fitting as well. So genetic optimization searches for a method that mimics the process of natural evolution. So it favors the groups or clusters that are better. So it'll favor the cluster of inputs that are producing better results. And it won't test every combination like exhaustive, so it's going to be more robust, isn't it? So what it does is it pulls out the stronger components of your strategy. If you can imagine your inputs as a cluster of components, and we're looking for the strongest, because the strongest is going to be the one that's going to produce the best results in the market in real time, hence the more robust process. Whereas exhaustive, obviously we're going to go through every single input. Which one's going to be more time consuming out of exhaustive and genetic? Which one do you think is going to take the most amount of time? Because remember that we are on a bit of a timeline here. We need to get strategies that we can create and put into the market, and we don't want to be spending 3 or 4 days waiting for a strategy to go through and do all its input testing. Yeah, so exhaustive is definitely going to be the most time consuming. So the walk forward is looking at a sample data. So basically what happens here is that your walk forward optimization is your data that you've tested, which is your out of sample data, and then you're looking at your in sample data, which is your unseen data. So it's looking at two forms of data, and I'm going to show you how to do that in TradeStation now or shortly. And the beauty about this walk forward analysis is that you don't actually have to wait for Monday to come around or for the next trading day. You can start to see exactly how that strategy is going to play out in that time period that you've selected in your data testing. So you can very quickly see, all right, well, I've created this strategy, I've got my inputs, I'm feeling pretty confident. I've done a genetic test, and it feels as though this system, it looks really good as far as my key tenets that I'm looking for, my benchmark stats. Let's see how it runs in walk forward, and we can start doing that straight away. So that's pretty exciting. Now, as we get further and further into this presentation, obviously in part 2, when we go through the walk forward analysis, you're going to see some fairly impressive, I guess, tools that are going to be available to us, or that are available to us now, that we're going to start using. So definitely, I would encourage you, as we go through this, to really invest a lot of time and energy into doing the training and making sure that you get across all of the elements that we're going to be covering over the next 2 to 3 weeks, because that will definitely put you in a much stronger position with your strategies going forward. So very exciting stuff. There's a lot of fantastic tools available to us now. So Trend Trader. So that's what we're going to look at today. We're going to look at, all right, we need to do an example here. We need to have something to take and start, obviously, tracking in real time, or not in real time, but do our optimization and then do our walk forward and then track in real time. So we're going to pick a trend trader strategy. We're going to be looking at, obviously, 2 different charts. We're going to look at the DAX and the Euro US dollar. The reason why I chose those two are the DAX is very volatile. It's very volatile. It's got a it's a strategy. Oh, sorry, it's a market that is basically constantly changing. So if you look at the DAX, it's a great market to obviously make money on, but you've really got to be at the top of your game to be trading that. You need to be switched on. You need to know a lot about the market that you're trading. You need to do your market profile. So it's a great market to get into. The Euro US dollar, obviously one that a lot of us are trading, or a few of us are trading, and it gives us other challenges, doesn't it? We spoke about that on Tuesday night. The challenge with the Euro US dollar and the currencies are the spread, news events, geopolitical events. There's there's a lot of things that drive the currency markets. The big banks, obviously, pushing the volatility and the volume of the banks, of the currency market, and typical moves of the currency market. So, and then you've got the 3 distinct trading sessions. So the Asian session, the European, and the US session. So there's a lot of factors that come to play in those 2 strategies, or those 2 markets. So applying the trend trader is going to be an interesting exercise. So we're going to look at the charts, where the trend trader obviously is a trending strategy. We're going to have access to a multi-system strategy when we trade. So even though we're looking at the trend today, we're actually, our goal when we put together our portfolio is what? What's our goal? I mean, obviously our goal is to minimize our drawdown and maximize our overall net profit. That's our primary goal. But how do we facilitate that? How do we do that? How does that magic happen? That happens because we've got that diversification across markets and using multi-system strategy. So we definitely want to make use of that multi-system approach. So we're going to start with the trend. We'll kind of, through this series of presentations, we're going to be adding other markets and so on and so forth, and other systems. So you'll also have access to TradeStation strategy library. So us as a group, we have access to our system library, which we've got about 18 to 20 systems. We also have access to a strategy library through TradeStation. So there are strategies in TradeStation that you can, and we'll have a look at some of those tonight, you can just load up and they'll basically start working for you. Now, the strategies are, they're just generic strategies on the platform. So obviously you need to, if you're going to start playing around with those, you want to make sure that you do a little bit of research into how the strategy works and what drives the strategy. But that can be a little bit of, that can be interesting as well. And the strategies typically in the library that are available in TradeStation, they either come as LE, which is the long entry, or SE is a short entry. On our strategies, you'll see that we've got longs and shorts split. So I'll show you the difference there as we go through the exercise. So remember, the input strategies are what we optimize. So anytime we're doing any optimization, we're only optimizing the inputs within our strategy. So remember that there's indicators within a strategy. They don't typically drive the strategy, but the inputs which are derived from potentially that will drive the strategy. So let me just click on here. Now, I did mention that we were looking at the DAX, and I did mention we were looking at the Euro US dollar. So what I'm going to do is I'm going to make sure that everybody has access to Trello's DAX board and Trello's Euro US dollar, because as part of this exercise, I would like you to basically read a market profile. Now, Mabel's been kind enough to offer her DAX market profile up. It's a really good market profile. Jump in and have a read of that. That is an excellent profile on the DAX, and it really means that you're building your market knowledge, doesn't it? It means that you're investing some time, effort, and energy in understanding the market that you're trading, which is critical and fundamental to how we kind of move forward with our analysis and our testing. So we need to know, basically, if we're building our market knowledge, then we need to do that to ensure that we're not taking too much risk, and we're optimizing every opportunity, aren't we? Because what happens if we don't do that market profile? What happens if we don't spend any time at all investigating the market that we're trading, and we just leave it up to fate to just take us into the market, use a strategy? Yeah, we're like lambs to the slaughter. So really, that's not the way we trade. If you remember the 10 unbreakable rules that we put together, I think module in the orientation session, those 10 unbreakable rules are listed there for download. Basically, in those 10 unbreakable rules, we're professional traders. We plan our trade. We trade to our plan. We basically have a structure, a methodology, and we're prepared. We're not unprepared. We're not undisciplined. So we need to make sure that we do our due diligence before we go into a market. Part of that is knowing your market profile. So risk versus opportunity. Obviously, one of the things that you're going to want to know before you go and trade a market is there the opportunity there for the risk that you're taking? So there's no point us going into markets like markets that have a ridiculous spread if we're potentially and very low volume, low volatility, even if we've tested up a strategy that looks really good on paper, but the reality is we can't get a fill. Now, a good example of that is gasoline. Gasoline trades okay. It trades profitably in the US session after the US Open. Outside of that US session, the spread's ridiculous. So if you haven't done your due diligence and try to trade outside of that market session, the US session, you're basically getting exposed to ridiculous spreads on that market, and that's just a good example. So we definitely want to do our market profile. I'll open those two boards up on Trello and make sure that everyone has access to those for you to have a look at those reports, and they are definitely recommended reading for this exercise. I'll also include that in obviously in the training material that we're going to be putting up for this session, because this is going to be competency based. Now remember, traders, that when this when this gets loaded up to our members area, if you have not completed module 9, so if you haven't done your automated testing, then you're not required to do this component of obviously the training, because you haven't gone through module 9. So don't feel as though you need to go in and basically complete the assessment, because that's a little bit further on in the course. Let's keep going. So we need to look at our daily charts. Why are we looking at our daily charts when we start talking about market profile? What's the point there? We mentioned it a little bit earlier. What's the big thing about the daily charts? Yeah, we need to get a bit of a view of the landscape. What's going on? What's driving this market? What's the overall trend, the volatility? Where are things at? Have we got a long bias, a short bias? We need to get a feel. We all need to start processing what type of. I'm going in and I'm going to start optimizing here soon. So I need to get a feel for, okay, if I'm going to go in and start testing these strategies, I need to start thinking about the time horizon I'm going to be using, don't I? What time horizon is possibly going to offer me the greatest opportunity? Remember, movement equals range equals opportunity. So the key things there are time horizon and opportunity. So what do I mean by that? What do I actually mean by that statement there? I'm looking for myself to go in and apply the trend on the DAX and the Euro US dollar. I'm looking for that system to give me a profitable, obviously, outcome when I start running my optimization. Why am I concerned about the time horizon? That's obviously going to be critical, isn't it? Yeah. So it leads us into our next point, which is basically our trading objectives. So I need to know, before I start going in and jumping in, testing and optimizing and doing all that stuff, I need to know modules 4 and 10 of the Pro Trader program clearly dictate what your objectives are. So that should have been spelt out for you clearly in module 4 and module 10. Now module 10 is where we went in there and we basically said it previously module 8, but now module 10. Module 10 now has us thinking about, right, well, what are my objectives as a trader? We spoke about this on Tuesday. What's my driving factor for my performance? If I'm going to optimize, what am I optimizing for? So I need to work out, firstly, am I an intraday or a swing trader? If I'm intraday, then I'm basically in the market and I'm closing out at the end of the session. If I'm a swing trader, then I don't really care when the trade closes out. I'm looking for those big sweeping moves, so I need markets that are going to give me that ability to get those bigger moves. So am I trading a strategy? Am I creating a strategy that's going to high turnover, so it's trading a lot? Or am I looking for something that's got a capital growth component to it, where it doesn't trade as much, but it does bring in a lot of money? So more the swing trading type strategy. Now, am I looking at my benchmark stats? What is driving my optimization outcome? When I'm assessing my strategies, what am I assessing them against? Am I looking at a high average trade net profit, a great risk to reward? Is percentage win rate key for me? Because I know some of the traders in the group really are 100% or not 100%, but highly focused on win rate, and then they'll look at average trade net profit. Or is it ratio of average win to loss? Or is it the profit factor, number of trades per week, number of trades per day, etc., etc.? So just quickly, with the traders in the group, if you could put down what your number one benchmark stat is for the system optimization. Because remember, we're going to be optimizing here in a minute, so we need to know what is the one thing that you are going to be requiring for your optimization outcome, because that's what we're doing. We're optimizing a strategy to get the best result, and these optimizations that we're running, we can select which optimization is we're basically going for. When we look at our optimization report at the end of doing this process, we are going to be able to select our best our best combination of inputs based on any one of those variables. So I've got average trade net profit is coming through a lot. Win rate, some risk to reward, excellent. So it just tells me in the group, which is great because it tells me that if I gave everybody a strategy, the same strategy to trade, and I'd optimized it, I know that pretty much every person in this group would possibly change that strategy to suit their personal requirements. Who would do that? How many people, if I gave you a system, you would basically take it and then straight away change it to meet your requirements? I'm pretty confident it would be almost 100% of the group. Excellent. That's exactly what we want because you want to really get some skin in the game. You want to invest in the strategy. You need to have ownership, and ownership comes from the process of developing, optimizing, creating. So when you do that, you actually start putting together your mark on that strategy, which is what we want. And that's all about owning it. That's exactly right, Trevor. So guys, we're going to just jump out of there now. That was our little bit of a walkthrough of the optimization. We're now going to go into our charts, and we're going to have a look at this trend on the euro and the DAX, and I'm going to quickly do a very quick review of the strategy. Most of you know it. There's a couple that don't. So for the benefit of everyone in the group, we're just going to basically just go in and do a quick recap. The first thing we need to do is we need to make sure that we've got our strategy on the chart, and we do that now. TradeStation is great because it has insert analysis technique. That's where your indicators are. So they haven't called it indicators, they've just called it insert analysis technique. Now, we as a group, because we're used to the trend trader, we know the different things that make up the trend trader. They're GMT support resistance, they're the take profit, and they're the paint bar as well. So what I'm going to do is I'm going to load into this chart here all of the things that we use within GMT to create our trend trader strategy, and then we're just going to quickly break those down for you so you've got a fairly good idea of what we're looking at here. Now we're going to put the indicators. Now if I put my indicators on and I've got my support resistance, my take profit, does that mean the strategy then works? I've got my indicators on, so does my strategy now work? No, it doesn't. So the indicators don't really drive the strategy. They have no bearing on the strategy. The indicators need to be built into a strategy, which is a separate component. So within TradeStation, very distinctly, we've got indicators and then we've got strategies. Strategies basically are the trading methodology that you've created that generates the trades. The indicators really are just a visual thing, a visual cue for you to take trades. So for example, I'm going to just load a few things in here. I'm also going to put in my MACD Bollinger Band indicator as well, and I'll just load that up on the chart. Bollinger Band, fantastic. I won't load everything, but that's pretty much the key things that we want to look at the moment. Now, and the tracker B, we'll put that in as well. Yep. Tracker B, okay, and I'll explain that here shortly as well. Alright, so I've got loaded on this chart. It's a 5-minute. The reason why I picked a 5-minute chart, purely because I want to get a lot of data. What happens with tick charts and time? What's the difference between time and tick-based charts in TradeStation? For those of you who are new to TradeStation, I'm going to just give you a quick rundown. The time-based charts will basically load up as long as you want to go back. So I could basically load up a couple of years of data here, which is great because that means that when I do my optimization, I've got a lot of data to reference. What's the disadvantage of that, of having a time-based chart? It can be a bit noisy. It can be a bit, yeah, look, like I'm not personally a huge fan of time-based charts. I do use some time-based charts, but I don't typically, they're not my go-to chart. Like I basically have a preference for for generally range and tick-based charts, transaction-based charts. So, but we're going to use time today because we can load a lot of data up. So that's one of the reasons why. The disadvantage with the time-based charts is that we tend to see a bit of noise, and you're waiting for that period of time to finish before you can get into the trade. So you might get a very big move over 3 minutes, but you've got to wait for the 5 minutes bar to print. Then you can go in, and that might be like 3/4 of the way through the move, so you've missed a lot of the move. That's the disadvantage with that as well. So guys, we've got the DAX loaded up. We've got our indicators on there. Now I'm going to just basically take you through this. Let's get an area where there's a little bit of movement. So generally with the trend, very simply, once we break, we've got support resistance, dynamic support resistance that we operate off. Dynamic support is the green, dynamic resistance is the red. So once you get a dynamic resistance level print, if price breaks through that, then we're looking for a long setup. And we get the long setup when our price bars change from a green color or a white color to a cyan. Now on a short trade, if we get a break through our support level, that tells us that there's an impending trend, and then we get the white candle set up. So very simple. So we're basically looking for breaks of support resistance to get us into a trend. We can use the MACD Bollinger Band down the bottom here for confirmation of energy in the market, for momentum in the market, but typically some traders use that, some don't, but we'll just keep it simple for this exercise, and we're just really looking at the trend and a break of the trend. Sorry, break of support resistance. So that basically is our trend trader. Now, as I mentioned before, the key things with this trend trader are the support resistance. These little green dots are our dynamic stop, so our trailing stop. So you can see here, once we get into a trade, we've got the little green dots tracking below, and once we get into a short trade, we've got our little red dots tracking below, and that's part of our stop strategy. Now, what I want to show you now is that's the indicator component of the system. Now we're going to go into the strategy. So if we right click on our chart, the strategy is accessible from insert strategy, and you'll see we've got a number of strategies loaded in there. We want the GMT V2 trend, that's the one we're after. I've already loaded that up on the chart. So if you right click on your chart and you go to format analysis technique, you'll see that the first tab is your indicators, the second tab is your strategy. So this is really what drives the performance of your system, the strategy. So I'm just gonna pause you for a second. Just give me 30 seconds. Sorry, traders, I had to just my throat was starting to give way, so I had to just grab a water. So basically, our strategy is set up within TradeStation. For those of you who are new to TradeStation, this is basically how these strategies run as far as on the chart. Basically, this strategy will drive your inputs in your system and will dictate whether you're taking trades or not. So it's very important that if you load a strategy up, that obviously it's on, and we had a bit of a discussion about that last week. And that's as simple as just hitting the status on and off. So I did mention before about generic strategies in TradeStation. If you go to your insert strategy, these are all strategies that are available to you to use. So you can go in and load any one of these strategies up, and as you can see, you've got LX, SX, LES, SE, so longs and shorts. They're based. If you wanted to load this strategy up, you would need to load both the LE and SE up. That will give you the long and short side of the market. And the strategies are, there's a bit of a definition to each strategy, so if you want to have a bit of a play with those, they're in there as well. But as I mentioned before, our systems or our strategies are loaded in there, and they've already got the long and short set up within the system. So if we go back into our strategy, if you want to basically just trade one side of the market, you're just turning that that short side off, and you basically won't get any trades on that side of the market. Now, if you want to separate the system, so you're trading longs and shorts separately, well then you would notice load a second strategy up, obviously. So you can have more than one trend strategy loaded up, and obviously with more than one time frame. Would we generally load more than one strategy up, as in trend, cycle, momentum? Would we do that, or would we try to avoid that? I would definitely avoid that. That would be something that I would stay well clear of. So avoiding that strategy, loading those strategies up where you've got multiple strategies on the trend momentum, because then you tend to get a conflict. I've seen a lot of really messy charts with conflict on them based on the fact that they've got multiple strategies loaded. So guys, all right, well let's put the longs on as well. And what we're doing here is we're basically just going to go in and we're going to try and grab as many trades as we can and get this as profitable as possible as quickly as possible. So then we can start doing some optimization and some more forward testing. So at the moment, this is what I have. I've got 160 trades. I can take this back a lot further, so I'm going to straight away do that. I'm going to take this back to say 6 months, and that should load. That should give me at least 300 to 400 trades, which is much better. That's exactly what I want. Now, I've done no optimization on this at all, so you can see that this DAX is pretty rugged. It's showing us a fairly strong drawdown. Now, the advantage we've got is that obviously we're going to go in and start doing our optimizing, and we're going to start looking at the walk forward optimization. But we're also going to have a look at, and this is one of the most important things as well, we're also going to have a look at the performance of the system based on the data window we have, and also the breakdown of the profit on the days of the week. So the beauty about this is we can very quickly see what's making money where, and this is a massive advantage when you've got a strategy. If you're quickly doing optimizing, you can see just at a glance where you're losing money and where you're making money. So as we start putting more data in and we start optimizing, we can almost start taking out areas that are really affecting like with no optimization whatsoever. Let's just do a quick canvas of this strategy. Monday longs looks pretty good. Current drawdown's pretty nasty though. You can see it's had a nasty drawdown there. It's had lots of fairly strong drawdowns. So at first glance, Monday looks pretty good. Average trade net profit's good, but that's a fairly sizable drawdown. If we go through, Wednesday longs looks okay, but there's a lot of trades there for not a lot of average trade net profit. So you can see there, Thursday looks pretty good. The current drawdown's not great, but the maximum drawdown, obviously that's coming off one of these big drawdowns, so that's not great. $3.57, not going to be making any money there, particularly on the DAX. $34 is a little bit too low. But interestingly, if you have a look at Thursday shorts, that that's just Thursday shorts. You could pretty much trade that. That's $8,512 straight up. No adjustment on the settings. That's showing you that day, and I would hazard to guess that that's got a fair number of trades in there. So 254 average trade net profit. Let's push this back. We'll keep an eye on that for a second. This is just an interesting exercise just quickly, and we'll just go back to adding a couple more months in there. We'll take that to 8 months, because remember the goal is we want to get, for this exercise, we want to get at least, well, close to 1,000 trades we'd like to get. So we're getting there. Like that's current drawdown. So we've added another 2 months worth of data, and it really hasn't negatively impacted on that day at all, which is interesting. So guys, what we're going to do is we're going to start doing a little bit of optimization, but while we're going through this, we're going to start looking at what happens when we optimize, and do we need to change these date parameters? From your experience with the DAX market, do we need to change those dates? Or not dates, sorry, those times? Are those times that the DAX trades, or are they outside of DAX trading hours? Because remember, we're talking about the Eurex, the German market. The DAX is not a 24-hour market. Yeah, so we need to change that to at least 800, and then the ending time would be 2200, because that's our market. That's our market hours. So we'll just run that now and see what impact that has on the overall outcome. And while that's happening, we're going to start. What's the first thing we're going to optimize? We might as well go in and start looking at our optimization. Now, just for those of you who are unfamiliar with this strategy, these are our start time, end time. We've got two time brackets that we can use. We're just going to use the one. The first thing we're going to do is we're going to jump down. We're going to leave this area here, and we're going to jump into our stops. We're going to concentrate just on our initial stop first up. So we're going to optimize that, and we're going to go from, say, a stop of 10 points up to 75, and we're going to use an increment of 5. So anytime you optimize, you're determining your starting point, your ending point, and the increment at which it's going to optimize. So we're going to go there. We're going to optimize that and go OK. Now, if we use exhaustive, are we going to use exhaustive or genetic as far as our optimization? Which one would we typically use? Because remember, exhaustive is going to check every variable possible. Genetic is going to select the most robust cluster of inputs. So we're probably going to go genetic, aren't we? Now, with this optimization, what we can do is we can go to our advanced settings, and we can then say, right, well, rather than optimize this strategy and then wait till Monday or wait till Friday to start seeing this trade live, I can actually just select that I'm going to have an out of sample window, which is my testing window, and I'm going to leave 30% of the data off this optimization. So 30% of the data is not going to be optimized, and then what will happen is that basically will mean that the last 30% of data it'll be exactly the same as me having my system applied in the market in real time. So it'll stop at a certain point, and then it'll let those settings track out of sample. So let's have a look at how that runs. So we're going to have a look at that. So this will allow me to get a good feel. This is one of the advantages of walk forward optimization. We can set that 30% parameter to say that, right, well, whatever we test up, if we leave that 30% of data out, then we can see exactly how robust our strategy is going to be going forward. Now, this is the first part of your walk forward optimization. So when you're doing your testing going forward now, definitely go into those advanced settings and set that to 0 and 30, and that will allow you then to have a look at your chart, and I'm going to show you here in a second, and have a look at how your system performs in its out of sample data. Because remember, our in sample is our back testing, out of sample is the one. So this is going to come up with some settings here. Now at the moment where our overall profit is sitting just above 20,000, so it's a little bit less. So we didn't significantly have a look at the average trade net profit is $37. That's fairly low. What's wrong with that average? What's wrong with that max drawdown? So we've got a massive max drawdown. It's definitely too high, and we've got an average trade net profit that's too low. So we've got a fair bit of work to do on this. We've got a good number of trades, 38% win rate. Most of us would probably not consider trading this generally because of the win rate is very low. But let's have a look now. This system is this strategy. So our in sample is 12,000, and our out of sample that last. So these are our results. Our in sample this is our in-sample test. So the first 400 trades, as you can see there. And then basically once we go out of sample, this is what happens to our system. So it just breaks the strategy down, right? It shows you exactly what's going to happen when your system hits the market and what those settings are going to produce going forward. Obviously we've got a fairly large drawdown there, so that's something we didn't want. So we've got a bit of work to do to this strategy, because at the moment it's not performing as well as it should do. There's that drawdown is fairly significant. It happens after our inputs have been tested, so we need to do a lot more work to that system to make sure it's more robust when we go live in the market. Now, previously, some of you, or previously when we would do testing, or before we had this walk forward optimization, you would generally run your system for a certain period of time and then test it live in the market. So you'd go through and you'd run, say, over 3 months, generally three to 6 months testing, then you'd run it live for a month. Make sure that whatever inputs you came up when you were optimizing your strategy were robust and solid in the market going forward. And then once you've done that, you've had your month of trading, then you go and re-optimize your system using this new month in there, and then basically you'd add in that month of data there, and then come up with your next set of you'd run your next optimization. So what you're constantly doing is you're adding that new month to your optimization parameters. So as the market dynamics change, which you can see here on a daily chart, they're changing quite frequently, you're going to be wanting to regularly optimize your strategy based on obviously going forward in your testing. So one of the keys for us is that we want to be able to do that going forward without having to actually manually do that. And this is one of the features of the walk forward optimization, which we're going to talk about obviously more so next week. But what I want to do is I want to take you through now. So we've basically tested up the DAX. We have our charts. We've got all our data here. Now what we've done is we can actually go into our strategy optimization report here, because we've set up a report, and we can have a look at exactly how this DAX data has broken down. Now this will give us a look at all of the optimization. It just doesn't look at the one test that we've done. It actually breaks it down so we can have a look at each of the different tests that were run. There were 14 different tests run. It gives you a bit of a look at the different stops, because we just tested on the initial stop, didn't we? So this tells us that the optimal stop for this strategy, the trend, was 75 points. Now, to me, that I would not be trading that stop. That's too high. So we can have a look, and we can go back in, and you'll have a look at the settings now. We'll just go back in here for a second. Get rid of that for a second. So if we go back, it selected the optimal stop there, and that optimal stop that it came back was 75, the initial stop. So if we go to our optimization report, we can get a bit of a look really at our other options for stops, can't we? So we'll do that now. Actually, we'll just run that optimization again, and we'll go into our strategy. And we'll actually run, now that we've run the initial stop, we might modify that shortly, but we're also going to run our trailing stop. Now at the moment we've got a trailing stop of +4. So remember that we have the option of being closer to the market or being further away from the market when we get a breakout of the trend. Obviously this is going to give us an idea of those parameters. I've selected being 10 points away, negative 10 points away from that trailing stop, which is that dotted green line, or the red line if you're going short, or being closer to the market, so more like 4 points closer to the market. So we'll run that optimization, and we'll see how that plays out. Now once we get that, we can then go into our, which is just here, our strategy or optimization report, and then we can have a look at some of the other some of the other components of that report and see exactly how that report, or what inputs that report's produced, and select our optimal trailing stop based on other factors apart from profit. Because remember, the report's really at the moment just giving us the most profitable outcome. Is that what everyone's going to be looking for, the most profitable outcome? Or are there other things that are going to be driving your decision making process in the optimization? Yeah, exactly. So we can go in there and say, and we've basically got +4 gives us, that's the most profit there, but that may not necessarily be the average trade net profit 27. So that's actually the biggest average trade net profit. It's not necessarily winning on all fronts, but it certainly is max intraday drawdown and massive $9,000. So that's obviously trading overnight as well. So at the moment, that would be one of the preferred stops there, or sorry, the trailing stop 4. You've got 9, which is almost as much profit as the 16. It's got 589 trades, the same as, and the average trade net profit there is $22. So that's not bad. It's less profit, but again, the average trade net profit is a lot lower. So you can see that even if we do a little bit more work on this, which we need to, you can see that it's giving us information that we probably haven't really been looking at necessarily as much before. And we can also see the outer sample data results. If we pick whatever strategy we pick, it's giving us 15 trades, almost $7,500. Average trade net profit is up to $40, so that's much better. So we can see that this strategy going forward is actually doing a lot better than it has done previously, because that's over 15. Out of 186 trades. We had over 400 trades on the previous set of the previous data sample. So it just gives you a really good breakdown of what your optimal stops targets are. So you can go through and test on the inputs based on what the inputs have in their strategy. So we can go back to our strategy now. So what we're going to do, we're just running out of a bit of time here, but what we're going to do is I'm going to do a little bit more of a video on this to add to the training area, just to go through a bit more of this optimization. And then for those of you who are, I guess, new to optimization, it'll be beneficial. For those of you who have done a fair bit of optimization or well and truly into it, you may want to kind of skip through the second part of part 1, and then you can move on to the walk forward optimization, which we'll cover on Monday. So guys, that's going to wrap it up for tonight. As I said, I'm running out of a little bit of time there, but basically, I would definitely suggest that you start using that walk forward optimization, purely because it's going to start giving you a bit of a look at how robust your strategy is going to be moving forward in that outer sample data, because that's really what we're looking for. We're looking for, does our system stack up in its outer sample data? But before you get to that stage, you need to create something that is going to look fairly good as far as your equity graph. It's not really any point going to the walk forward optimization and going through and doing that unless you've got something that you're happy with to start off with. So it's just a matter of going through and getting that to a level where you're content and happy with the performance. So guys, that's going to wrap it up for me tonight. I'll load this training material up. As I said, I'll add a second video to that, so that'll be taking us into more of the optimization and the inputs that we have available to us, and we'll get that running. And then on Monday, we're going to go through the walk forward optimization and the actual walk forward facility within TradeStation. So thank you for your time. Looking forward to catching you on Monday. Have a super weekend, and yeah, all the best with your testing. Cheers.